what's happening to drop AMC share price, so on and so forth. And I know the next thing I'm going to show you guys is going to piss you off. Credit Suisse default swaps drop after central bank's liquidity pledge. Margin calls keep getting pushed forward in swaps and derivatives, and now we're here. Private meetings coming this weekend, guaranteed. Plus, derivatives collapsing is inevitable, lending is completely exhausted this time, and debt ceiling drama is incoming. Now, Citadel opening 4 new bank accounts activated March 27th. You can see right here in the DTC filing. Effective with the opening of the business on March 27, 2023, the Bank of NY Mellon account number 0901 will activate the following additional accounts. Now, the activation date of these accounts sync up with the total return swap date and a day or two before the Form 10K deadline. Probably nothing. BNY Mellon is also one out of 6 banks that backed Circle/USDC in league with SVB and Signature. Coincidence? You guys let me know in the comments down below. Moving on, we had something very weird happen. AMC closed at $4.47 and Ape closed at $1.45 today, which is the same price as yesterday. They closed at the same price for 2 days. How many percent is possible to close 2 AMC stocks at the same price in 2 days without algorithm? Now, aside from one of these stocks being a preferred equity unit of the other, we're going to leave that out of the situation because that makes it even more impossible to happen. But what is the likelihood of this actually happening? Well, according to artificial intelligence, which has a much better opinion on statistics than you or I do, assuming that the closing price of a stock can take any possible value and that probability of each possible value is equal, the probability of a stock closing at the same price on 2 consecutive days is 1 in the total number of possible closing prices. So this is 1 in infinite amount of times that this could have possibly happened, which is as unlikely as you could possibly get. Touching on that as well, it is plausible that certain hedge funds may have engaged in the practice of wash trading in relation to AMC stock, which could have resulted in a conspicuous lack of significant price movement and a 0.00% change in the stock's value. This is due to the fact that the trading volume for the stock would have been artificially inflated without actually altering the balance of supply and demand or the market value of the stock. The opening price for AMC stock was $4.40 with the closing price at $4.47. The stock also saw a highest trading value of $4.54 and a lowest of $4.38 with a trading volume of 37.99 million. Despite the considerable trading volume, the stock's value remained unchanged. This strongly suggests that there may have been some sort of manipulation occurring in the market, such as wash trading. Plus, the odds become even greater when you consider the FTDs due to close out this week. Notional value due has been higher every day this week than at any time period in over a year, minus 1 day in June 22nd. You can see right here the closeout date for the T+35 or fails to deliver. You have a ton of them that have to be closed out come up this week. Now, on top of that, we have seen the lowest volume over the past 2.5 years in the dark pool that we have ever seen on March 24th, 5.5 million. In mathematical terms, hedge funds can create synthetic ETFs through OTC derivatives by purchasing a portfolio of financial contracts that imitate the returns of an ETF, such as AMC or GME. Let's take AMC as an example. Suppose that the current price of AMC is $10, and a hedge fund wants to create a synthetic ETF that tracks the performance of AMC. The hedge fund could purchase a portfolio of OTC derivatives that mimic the performance of AMC ETF with a total value of $100,000. They can then bundle these derivatives together and sell them as a single AMC security on the exchange. Suppose that the hedge fund sells the AMC security for $95,000. They are left with a net exposure of $5,000, which they can use to short sell AMC. If the value of AMC goes down, the hedge fund makes a profit on the short sale, which offsets any losses on the synthetic ETF. If the value of AMC goes up, the hedge fund loses money on the short sale, but they still have $95,000 from the sale of the synthetic ETF. The strategy can create an infinite loop that allows hedge funds to continue short selling AMC while still profiting from the synthetic ETF. However, it can be harmful to regular investors who hold AMC as it may cause the stock's value to decrease. Therefore, it is essential for regulators to monitor the use of OTC derivatives and synthetic ETFs to prevent market manipulation and ensure fair practices. Now, shout out to Matt on Twitter. This is DD uncovering what happened with FTX, what's happening to drop AMC share price, so on and so forth. And I know the next thing I'm going to show you guys is going to piss you off. At what point does the SEC actually do something about these Ponzi shit crypto tokens of stock? 3 days ago, this piece of shit goes into circulation right as GameStop earnings approach. GameStop wrapped Ethereum created the same exact day the earnings were going to come out. How much did GME go up on earnings? 55% max, and this token had a 65% gain. Now, one was labeled GMEWETH and one is labeled GMEWETH underscore. Must have ran out of liquidity on one of them, so you had to make a brand new one. I retweeted this, so you guys make sure to go retweet this over on Twitter. It looks to me that they have suppressed GameStop's price after that 55% move so that it did not go parabolic, and we probably would have had a much larger gain if they did not create these tokens, and I don't know why the SEC or DOJ still has not done anything about this. Plus, we saw that 13.5 trillion market cap, which would have brought Ape's share over to $27,020 a share, but it's not only on these sites. This one is actually from Vanguard, the top owner of AMC. You think they make glitches this bad for Ape? Believe what you want, so will I. This is no glitch. This is for all you guys in the comments saying, oh, you don't know what you're talking about, it's just a written glitch, it's just Photoshop, whatever. Believe what you want, but I don't think these are glitches. And this also made me very, very aggravated. Adam Aaron tweeted, many Twitter reports to me indicated 9.3 trillion apes are outstanding, or we have a $409 billion market cap. Clearly both wrong. Either a data service inexcusably is an error, or someone criminally photoshopped bogus numbers. To the extent possible, we'll aggressively chase this. Are you dead ass? Photoshopped numbers? You gotta be shitting me, bro. Like, seriously, if I could have gained faith in him over the past month, just out of the grit of my heart, this would have just taken it away. This dipshit just really told us, photoshopped, someone criminally photoshopped. Moving on, AMC's chart, I think something is seriously about to happen, and let me explain why. Now, we talked about the cycles that line up with the peak every single time. We just targeted this one, it played out perfectly, and now we're selling off. Well, AMC has been slightly scaling to the upside. 24 days in, every single time this happens, AMC actually is more so in a downtrend, right? You're looking at this part right here, you're looking at this part right here, you're looking at this part right here, right? More so AMC's in a downtrend, and you can see it back here as well, every single time. As of now, I'm not going to say speaking too soon, because this could definitely play out where it comes back down and tests about $3.50 to close that arbitrage gap with Ape, which could be a possibility. However, the only time it's scaling up, you have these glitches happening, really bad glitches. You also have a potential fail within the algorithm, closing AMC stock price and Ape stock price 2 days in a row at 0.00%, which is definitely something to pay attention to. But on top of that, GameStop and AMC run together every single time. Now, I know GameStop had very good news, but usually the other one gets a sympathy play and moves the exact same. It moves the same every single time, right? The run back in January, the run back in June, back here, back here, back here, back here, back here. This is the only time where AMC didn't scale up with GameStop. It's probably because they're trying to bring GameStop down before they can try and let AMC move, and if AMC does move, they may be in trouble going forward. And I do think AMC does have a chance to sort of switch something up, especially with what's happening with the closing prices. Now, right now, you're looking at XRP and then AMC overlaid over it. Now, every single time XRP ran, AMC ran afterwards, so this is more of a delayed scale compared to the Ethereum Classic scale, which we're going to talk about in a second. But I did want to point out one thing, that XRP has been ripping over the past few days, and AMC is just stuck. It's stagnant. Something's happening with the algorithm, something's happening behind the scenes with shorts. I do think they could be trapped, and that play with GameStop could have possibly hurt them alongside with the S&P 500 moving over the past couple of days. But XRP has been up, GameStop has been up, AMC's cycle is trading a little bit different. You're having these glitches, you're having these algorithms keeping the stock flat, and then finally Ethereum Classic. AMC and Ethereum Classic move, but not only that, they move the same percentage gains. I measured the same low, AMC is only up 9% to where it's trading at now. Ethereum Classic is up about 25%. This thing is still having its move, and I do think it's going to move even higher if it does play out the cycle, so definitely keep that in mind. I think something could definitely be happening with AMC. Overall, guys, this is the Saturday video. Hopefully you enjoyed watching or found value out of the video. A huge thank you to the sponsor of today's video, Chart Prime. Imagine upping your game and having a 99% win rate in trading. Well, Chart Prime does that, as one of their analysts has a 99% win rate, and a ton of their members are making serious gains, saving a ton of time. Basically, with 6 unique indicators and trading algorithms, Chart Prime charts setups for you as they come about, such as bull flag, bear flag, flags, so on and so forth. They also chart what is a strong support level and what is a strong resistance level, vice versa, and categorize them in certain levels. So get access to one-on-one trading, use these algorithms, and up your game, up your level, up your status by hitting the link down below, signing up for Chart Prime, because it's a lot cheaper than anything you probably use and a lot better as well. Now, none of this is financial advice, and I can't guarantee you're making money off of anything. What I can tell you is you're getting a steal deal by using my link and signing up. Thank you, Chart Prime, for sponsoring today's video.